And joining me now in studio is Ken Kim. He's a senior economist at KPMG US. Ken, great to have you. Thanks for joining.
Thank you, Kristen. Great to be here.
Let's talk about the economic outlook, where it stands, of course, as these trade talks develop in real time and ahead of that jobs report we anticipate on Friday.
Sure. I think we are still going to see a lot of policy uncertainty going forward. So I know Treasury Secretary Besson is speaking as we are currently. But uncertainty, trade uncertainty, and uneasiness will be kind of continuing for the next several weeks until any deals are announced.
Has there been any indication to you that the jobs market, which at least the prior month, 228,000 jobs added much better than expected, that we are starting to see cracks in this labor market?
We are expected to see a slowdown in employment growth when it's released on Friday. We're estimating non-farm payrolls to rise by 120,000, which is about 100,000 less than what we saw in March. On the public sector side, we do expect a contraction of about 10,000 jobs, but we're not seeing the full effect of federal government layoffs yet because of buyouts as well as administrative leave. So those people are not counted as unemployed yet, so they're not going to be reflected as being jobless quite yet.
How could that funnel through into the economy?
Well, certainly as those numbers grow, it will curtail spending as well as businesses that rely on those portions of the federal government. So there could be both direct effects through layoffs and indirect effects for companies that work with the federal government.
Interesting. Now, we have seen some signs that a recession may be on the horizon. Is that in your forecast?
We are looking for a recession in 2025. We would put the probability at 60%. We get first quarter GDP for 2025 tomorrow, and we are looking for a negative print. So a contraction in GDP growth by 0.4%. And for the rest of 2025, we are looking for negative quarters in GDP for the remainder of this year.
And what is behind that? Is that tariff induced?
Yes, it is tariff induced, meaning that the price shock that consumers will be hit very soon, they're going to probably curtail their spending because depending on what estimates you see out there, for example, prices for motor vehicles, new motor vehicles, could rise anywhere from 10 to 20%. And in terms of dollars, that's anywhere from several $1,000s to maybe as high as $10,000. So that's a significant hit in terms of consumer purchasing power. So we think consumers will kind of hunker down with the tariff-induced price hikes coming into play in the coming weeks and months.
This week really ramps up earnings season in terms of the reports that we get from corporate America. And just this morning, we've seen several companies actually pause guidance or pull their guidance because of uncertainty around tariffs. You mentioned that consumers may hunker down in this particular environment. What about businesses? How do you anticipate that they will operate?
So, well, one way we're seeing that is with the no guidance being issued. So in that sense, you're already seeing businesses feeling the effect of the uncertainty. But another sign is that on Thursday, we get the Institute of Supply Management's Purchasing Managers Index, and that is a reflection of business confidence or optimism. So if those figures also show weakness, that would be an indication that capital spending plans are being curtailed in 2025 because of tariff uncertainty.
And in terms of comprehensive trade deals, there have been reports that while we might get modifications in the next few months, that really a comprehensive trade deal would take more like years to actually ink. So in terms of how long this effect could play out, are you estimating that in your particular models?
It's very difficult to know exactly when a deal might be announced because there's so many countries involved in the negotiations. As you mentioned, India might be forthcoming soon, but there's still a lot of other countries that an agreement needs to be reached with. So the best we can say that it is a fluid situation. Whether it takes weeks or months, I think it's hard to really say at this point.
Are there particular sectors of the economy that you think are more vulnerable than others?
One of those sectors would have been consumer electronics because how much that we buy in the U.S. in terms of cell phones and laptops and computers, but those have been kind of carved out. So an exception has been made for consumer electronics. And more recently, the other day, we did see news that for motor vehicles, there might be some exemptions where, although the 25 tariffs on finished vehicles will still apply, tariffs on steel and aluminum will not be topped off in terms of like an add-on tariff. So that will help to some degree. But there's still a lot of tariffs still in place.
Ken Kim, he's a senior economist at KPMG US, joining us in studio. Ken, thank you so much.
Thank you, Kristen.